Hello everyone, Nvidia did it again. The chip designer posted record revenues that beat expectations and offer strong forward guidance driven by demand for its artificial intelligence infrastructure. It also dispelled any concern around supply and demand. This is what we will be talking in today's video. I am your host, Nikos Zabouras, Senior Market Specialist at FXCM, and before we begin, please read carefully through the risk warnings and the disclaimers. Okay, let's get the ball rolling. So Nvidia posted on Wednesday, August 23, after Wall Street closed, strong results for the 3 months ended July 30th. That would be the Q2 of fiscal 2024. So we'll go over the main points of these results, but let's start by setting the backdrop as to why these results were so eagerly anticipated and closely watched. So OpenAI took the world by storm late last year with ChatGPT, a generative artificial intelligence conversational chatbot which sparked a race for AI supremacy amongst big tech such as Microsoft and Alphabet. This artificial intelligence revolution, however, is enabled by Nvidia's accelerated computing, which these companies use for the development and deployment of such applications like ChatGPT and artificial intelligence in general. Nvidia's leading work on the AI field allows it to reap the benefits of this artificial intelligence rush. Its stock, as you can see on this chart, more than tripled during the first 7 months of this year, exactly because of that the AI boom. And its performance easily outpaced the rest of the Magnificent Seven, a group that includes Meta, Apple, Microsoft, Alphabet, Amazon, and Tesla. All of them have done well this year, but not as well as Nvidia. And of course, the performance also surpassed that of the broader tech-heavy index, the Nasdaq. After the previous strong results, going into Wednesday's report, there was great anticipation in order to see whether Nvidia can continue to push on the AI front and whether that can create actual revenues. And Nvidia delivered, with CEO Joseph Wang touting a new computing era. Now, the company posted record revenues of $13.6 billion, doubling compared to a year ago and rising nearly 90% sequentially. You can see the progression of the revenues here. This also beat easily the firm's own forecast for 11 billion. Net income also surged in excess of 6 billion. And of course, that revenue growth it was due to the data center, which is now the main revenue generator, and it includes the AI chips for a company that was up until recently was mostly known for its gaming graphics. So data center drove the revenues due to the development of large language models and generative AI. Nvidia also offered very strong guidance once again in excess of around 16 billion. That would be up nearly 170% year over year if it materializes. That's forward guidance for the third quarter of fiscal 2024. Nvidia is far ahead than its competitors such as AMD on AI chips, but they are making progress. There is also some concern around how much growth there is in this market, and if it can, if demand can persist, and if supply can continue to increase, given various challenges still with the supply chain. And the truth is that the additional 25 billion stock buyback program that the company announced yesterday, may be an indication that maybe there is not much more market to grab there, because if there were, the logic is that it would prefer to invest that money than launching stock repurchases. However, both its CEO and CFO dispelled any concerns around that during the earnings calls, speaking of strong demand and continued supply ramp-up. Let's listen first at Nvidia's CFO Colette Kress, what it had to say during yesterday's earnings call.
There is tremendous demand for Nvidia accelerated computing and AI platforms. Our supply partners have been exceptional in ramping capacity to support our needs. Our data center supply chain, including HGX, with 35,000 parts and highly complex networking, has been built up over the past decade. We have also developed and qualified additional capacity and suppliers for key steps in the manufacturing process, such as CoWoS packaging. We expect supply to increase each quarter through next year.
Okay, so that was Nvidia's CFO during Wednesday's earnings call, speaking of strong demand and supply for the company's AI infrastructure. And let's go ahead and listen to CEO Jensen Huang as well.
The world has something along the lines of about $1 trillion worth of data centers installed in the cloud and enterprise and otherwise. And that $1 trillion of data centers is in the process of transitioning into accelerated computing and generative AI.
Okay, so that was Mr. Huang, who also spoke about this transition that is happening towards generative AI, and how this can continue to drive the company forward. Now, that's pretty much it around the results. Let's recap and say that Nvidia continues to build on the leading work it has been doing on the AI front, and when these results showed that this AI boom delivered for the company, delivered revenues, and can continue to do so based on the strong forward guidance and the message that there is still demand and supply can continue to increase, even though there are definitely some concerns around whether what we're seeing now is actually sustainable. But both the CFO and the CEO dispelled that. Blowout results overall. Markets liked what they heard, and the stock jumped more than 6% in the extended trading after the result. That's it for me. Thank you for joining me.